Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. It is Wednesday. Could be an interesting day. I mean, it's been a fairly active week so far. A little bit more active than I thought. But it's also been tight. So we'll see where this goes. Let's kind of look at what we got in front of us this morning. Charts. If I can open up the right chart. Okay, so here we got the ZN. They have in the overnight moved higher. It's not outside of the range here, but it is higher. And I don't really have like a super clear driver for this, but we do, by the way, we have auctions today and stuff. So ES also extending a little bit, but ES coming back. Oil trucking along there. Maybe now that we're at 75, maybe we are going to get a recovery here in oil. Gold and silver still kind of going sideways, although they did have some bullish action yesterday in silver. And Kappa doing pretty okay. 6J. Well, they found some support at 0.07, and the dollar, you know, still kind of just chilling just a little bit below 102. So big move in the dollar earlier. Few weeks earlier, but it's just kind of been chilling here now since then. So that's where we're at now. Coming into like, what do we have in front of us today? We get US current account. There's not a whole lot at the bottom of the hour today. At 10 o'clock Eastern time, we do get existing home sales and CB consumer confidence. So those are important numbers. We also will have Fed Goolsbee and Harker speaking at that time. And we also have a 20-year bond auction. And I just want to note that 20-year auctions have been going pretty well the past few months. I mean, they are special in auctions, so they always tend to go well. So that would give me a slight bias to buy, if not going into the auction after the auction. Buying after the auction. Pretty good chance that treasuries will rise after the auction. And you know, the overnight action is up as well. I think that most of the reasons to be going short here at this time are more speculative. And I kind of feel like the speculators have been burnt too much from this. They might be a little reluctant to do it. But you never know. We are just not, the pricing is just not right in my opinion. So could see a change. My mustache is tickling me. Oh, man. All right, well, let's come over to Twitter. See if there's anything interesting. Heather, 14% under peg on Polinix. That is curious. Fed Whisperer, 1 hour ago. Since their meeting last week, Fed officials have been fluxumed that investors expect even faster and deeper cuts. The result, confusion over when and how quickly the Fed might cut. The Fed shouldn't have been surprised by the market running with it. I agree. This whole situation is just a little silly, and I still feel that it must be that they just didn't want to screw things up for Christmas. Like, I'm gonna blow my nose here. Goldman Sachs says the Magnificent Seven now makes up 17% of total U.S. single stock net exposure on the firm's prime book, down from 18.2% at the start of December and a record 20% seen in July. Yeah, which is kind of weird, especially considering that the whole thing was like a counterintuitive trade that I think was primarily driven just by everybody piling into it. The rise of the Magnificent Seven is definitely the most unexpected and interesting development that we had this year. Morning Tactical Tenacity and J Hill and Jiwi as well. We got listen, Wednesday, sometimes they make moves on Wednesday, right? We gotta keep our eyes out. Interesting, there was an iceberg here in this area to start out. Even though I'd say the activity is pretty light at this moment. So that alone, seeing that at the start, has me, think, well, okay, wow, look, did you see that stop run right there? So they hit at 24. It was only 916 contracts, so it wasn't huge still. But then 23 contracts hit at 24.5. So, of course, there's no way for me to really know for sure. But that might have been a stop run. That's a little unusual. Somebody probably caught some slippage there. So make sure I've got like my, oh yeah, see, I don't have my new squawk on. That would help. That would help. Rodrigo, good morning. The thing that I gotta watch for here, we may have a little bit of a move up. Oh, hold on. Still have my speakers on. Can you turn that off? This might be a situation where you might get a move up, but it's like really brief. I kind of feel like that if I'm really feeling a trade, that I would want to take it here. But I think I'm slightly biased towards the upside at the moment, which is hard for me to say because, man, selling 388 just seems so crazy to me. But I don't think I'm seeing enough to justify a trade. I'm just kind of getting the itch that there could be something going on here. Am I a fan? It's on by default, so. I do kind of like that it makes it a little bit easier for me over here in the micros to see what the opening range actually was. But turned it off. I mean, I think the one thing that they did that was really nice about it is, oh, by the way, I have that delta column up too. Probably turn it off next week, but I've had it open. Which, by the way, you can see here clearly, like the cumulative delta here in ZN is actually pretty varied right now. So like there is something going on under the surface. There's not enough information for us to see if there's actually an imbalance yet. But we should keep an eye. This is one of those situations where, like, I don't necessarily know if there's an imbalance, but because it's Wednesday and because of the activity that I'm seeing, you know, I have an inkling that there could be one. Anyways, the thing that they did that was nice was, you know, they included it into a column that's already there. So it doesn't cost me screen real estate or it doesn't really cost me anything to have it on there. So I might as well. Now that they allow left, right, you want it centered. Yeah, okay. Based on the changes that they've made and everything, I'm kind of thinking there must be a lot more people out there trying to scalp NQ with this than we realized. There's a problem with allowing for more customization is never enough. Well, I'm actually a little bit surprised that Peter would agree to do it with opening range. But I guess opening range is just like so widely used by people that, you know, they put in there. I've done some studies of opening range before, and my conclusion was that it's not really very predictive of anything. Or at least the setups that people try and set up based on opening range don't really work very well. I think that there is something to the opening range in that the vast majority of the volume happens in the first 30 minutes of the S&P 500 open. So there's that. But this whole idea that like you get to the opening range and then that's a place that you should like take bounces off of or through or whatever just doesn't work very well. Like, I would say that most technical analysis that I've back-tested doesn't work very well. But, you know, there's so many other things that I've been able to get good results from. At least profitable results. I wouldn't say good risk-adjusted returns, but profitable returns. That these other ones that everybody spends so much time with, it really makes you wonder. Is Bitcoin doing anything weird? I am seeing a lot on Twitter this morning from the kind of like the anti-Bitcoin people. I think because they're very curious about the tether peg on Poloniex going under. I like that you said they try to scalp NQ, yeah. I mean, the further along I go with this, the more I find that there are a lot of people that are just taking on risk, right? There's no real statistical edge to anything they're doing. They completely misunderstand the statistics. They don't understand the fat-tailed nature of markets. They often misunderstand the indicators and statistics those indicators are based on, and all they're doing is they've got a really wide stop. It's just so common. And I think part of the problem is that they do make money in the short term, right? They'll blow it all eventually, but they do make money in the short term. And so you do see a tendency for everybody in the industry to cater to that a little bit. I think the most useful thing Jigsaw could add right now is more features related to spreads and being able to see spreads on their charts and stuff like that, right? But how many people are actually using that sort of stuff? Not nearly as many as there should be. That's where I really need to find some good data on, like, what are the long-term, like, what would be a CTA strategy based on the yield curve that I could program up and look at and start to, because if there was, maybe there is a scalping strategy that is kind of like that. I remember John telling me that when he first started, there was this guy and he had this absolutely massive trading room where he had all of these guys just trading the knob spread. And they had some trade that was, almost always worked out on the knob spread up until, it crashed and burned. There was a big market volatility spike and they all crashed and burned, and the chat, like the trading room disappeared in the course of a day. An indicator looking at correlations? Oh, I would just like to see the ability to chart the spread in the Jigsaw charts is all I'm really asking for. I've kind of looked at trying to do something where, cumulative delta for a spread, and I've never quite been able to get it to work. Even if you're not taking excessive risk, by the nature of the market itself, you might have an edge and make money, but eventually the market takes it back. Yeah. You'll take from the market as much as you can, and then when the regime changes, you reduce your losses. Yes, that's totally what you want to do. Well, I guess now would be a good time to show you guys this, stuff that we had from our strategy. So... where is it? Strategy analyzer. So I've been working on, some sort of a CTA strategy to see what kind of an edge I can build on daily charts. So I used rate of change as kind of like my key baseline indicator, and I tried adding a bunch of stuff, although I don't think that this other stuff is really doing a whole lot. But anyways, yesterday we added leverage, so it sizes up based on the profits that it's made. I also added some risk management. So in particular, I need to add another property here, but I basically told it, okay, you have $100,000. So $100,000 plus the money that you've made already, you can't lose more than 3% of it, is what I told it. And so a weekly loss management strategy on top of that, and a good reward factor. So it's a reward factor of 3, and you get this, which 730,000. I think that's one of the largest I've ever had. Now, I think it's deceptive because we're running this on daily bars. I also switched it so that it uses 5-minute bars. That actually didn't affect it very much at all. So I think that's all good. I think that these results are accurate to if you had traded this strategy over that time, but I still am extremely suspicious that the results are mostly, curving. What do we call it? Anyways, when you come in and you look at the analysis, the reason why I was bringing that up. Oh, okay. No, that's not right at all. Okay, so I got this really weird thing where, like, there's this other issue. So, like, when I ran it, it told me I was making 730,000. But if I rerun it, sometimes it doesn't give me that. Sometimes it gives me something different. And it's like there's a property in there that's changing or something. Well, okay, that time I ran it and it was fine. I don't know what the deal is with that. Okay, yeah, look at the curve. when you add compounding, it's like, whoa, holy crap. But like in reality, what is it doing? It's taking risks. It's just taking risks, and it's because it's made so much. It's starting to take big risks, and it scales up very, very quickly. This is kind of the thing, is that like if you've got something that's working and you start scaling up, you can scale up really fast. And that's something that I've never really done. It's something that I probably should have done. But when you come back and you look at the Sharpe ratio and you try and look at it from a risk-adjusted measure, the results suggest that it's not that good. Maybe if I was running this same strategy across, all of the major CME instruments, maybe we would get a better Sharpe ratio because those returns would kind of even out. Maybe. Sean Tuffy, whatever you think of the Bitcoin ETF, you have to admit it would be hilarious if Gensler rugged everyone and rejected the applications at the 11th hour. I mean, I still don't think that's going to happen, but everything that they're telling me says that the Bitcoin ETF is going to happen. It really is. When you look at the chart, it really does look impressive, doesn't it? I don't think it's actually as impressive as it seems. It's just compounding. So if this strategy is curve fitting, that's the word that I'm looking for. It may just be that I curve fitted it really well. I mean, there are a couple of... So this will happen to me a lot, actually, is like... I'll come in and I'll do a bunch of like optimization and everything. But then the results of the optimization make sense. Like the period 1, 2, 3, 50, 70, 140, that fits in. The numbers that I'm getting for these other periods fit. Even if you're using, there's a lot of other periods and stuff that you can use that are still profitable. And not to mention that I don't think that these other things like the CCI and so forth are actually contributing a whole lot to the profits. So, but it still could be curve fitted. And there's just like not enough data for me to, like I can go back and I can say, okay, what if I do it on, well, we did that the other day. Like we did it on 3 years of data and then we do it on the whole time period. And when I do it like with steps, like readjust every few months, that doesn't work. I could do it, curve fit it on the first 3 years and then run that on the rest of the time series. That would, I think that did return profitable as well. But I just know the probability is that it's curve fitted. So all you can do is just like start trading it and find out, I guess. I don't know. When are we seeing it in action? I don't know. I don't know if I'm going to do it. Well, so one thing that I think we should do is let's run it on ES. Now, for ES, we might have to do something different with our stops. Let's tell it to use, like I want to have a really big, let's give it a really big stop, like 200 ticks. Yeah. And we'll run it like that. Okay, let's go into politics. Do you think that Trump still has a chance? Oh, that's funny that you put it as still has a chance. If the election was run today, Trump would win. Just straight up, Trump would win. Now, there's all sorts of shenanigans going on. The big piece of news yesterday was that Colorado kind of pulled the trigger on the whole we're banning you from the ballot sort of thing, which I personally think is an extremely undemocratic decision. And I really hope that that goes to the Supreme Court and they cut that down, because he hasn't been prosecuted of any crime yet. But, you know, the whole thing is, at this point, is they want to prevent him from winning by getting some sort of a prosecution. And the prosecution might be completely unfair. You know, like there's that whole thing with the case in New York, for instance. That's one where I'm just like, dude, this court case is a complete sham. You know, the judge is clearly biased. There was no crime committed here. That's how they're going to try and stop him. So if Donald Trump loses, those factors maybe play a major role. Like if he was prosecuted in one of these things, I think that could hurt his campaign significantly. And that could prevent him from, winning, being president. Right? But, if the election was held today, he would win. And it's not even, I don't even feel like that's necessarily a statement about Trump either, to be honest with you. I think that Biden is just very unpopular. My income was better than him. Okay, the results that I got doing that on ES are curious. It was doing really, really well, and then it failed out, right? But that says to me that with the right risk management features, that there may actually be. So, like, if I come to... Well, first let's do the summary so we can get some of these stats. So the win rates aren't quite so great. It takes a lot more short trades than I would think it would. But the long trades are very profitable. Winners to losers are not bad either. Okay, so most of those stats are okay. Or at least like what I would expect. So now if I come into like my MFE and MAE and that sort of a thing. Okay. Wow. There are some losers that were actually $180,000 in the money before they got... That's funny. But we could probably cut these off. So see, if I have had a little bit better risk management, might be able to cut that off a little better. Like I'm using a hard stop, but if I was doing it based on like the size of the... So let's try more like 100. Let's try half that and see if that improves the results. Oh, you used to pay last tax? I improved it a little bit. But that actually gave it a larger drawdown? Did it now? Oh! Holy shnikes! At one point it was 5 million? What? That's actually a little wild. Although I still wonder why... It's almost surely like after the 2021 market trying to take shorts and stuff, right? Why is it not making very much on the shorts? I don't know. This kind of has a lot of the hallmarks of some of the, quote unquote profitable trading that I see from people, is like you size up and so you get big really quick and then you just blow it all, right? So I think, though, this actually strengthens my case that maybe there is an actual edge in what it's looking at. And if I can improve my risk management methods, that they might do better. So now let's try it on oil. Yeah, so on the politics thing, like the thing that I find the most perplexing right now is, everybody says the economy is doing good, but people's sentiment about the economy is really bad. What's with that? That doesn't make any sense. I'm surprised that people are surprised by it. Like, guys, we are late cycle. We are late interest rate cycle, which means that interest rates just rose a lot. We think that maybe they have peaked and interest rates are going to start coming down. And when you're late cycle, what you should see is credit is more expensive. So it costs more for you to get a mortgage. It costs more for you to get a car loan. And consumers are generally going to feel squeezed. Consumers don't like that environment, right? So I would be concerned if consumer sentiment was really high right now. You just raise interest rates all this much and people are still really positive about the economy and want to buy a ton of stuff. Like, that would be wow. I mean, the strength of the consumer alone is a little bit of cause for concern. But I think it's funny because this whole narrative that, like, oh, people should feel more positive about the economy and it's just the vibes that are getting them down. Well, that to me, I think is driven primarily by politics, Democrats that think that people shouldn't be so negative. And they're concerned that people's negative view of the economy is going to hurt Joe Biden's election chances, right? Well, the ironic thing about it is that if we were getting the sentiment that the Democrats want, we would probably be talking about raising interest rates further. Like, what's happening right now is probably like the best outcome for Joe Biden. Oh, you know what? My stop, probably not a very good one. Probably not a very good one. Yeah, I'm going to change this so that the stop, I need to change this so that instead of it being based on the number of ticks, that the stop is based on some measure of daily volatility is what I need to do, because I don't want to be curve fitting it to every instrument like that. If I'm going to trade a universe, it should be able to use the same settings on all of those assets. So I guess that's what I'll do today. It still actually pulls out some great series of wins, though. I find that so curious. It's interesting to see all the icebergs at the highs. Oh, NQ. Well, I tried it on ES, so I don't want to take up too much screen. I'm going to do it again next week after we've changed a few things. Jimmy Urio, does the Supreme Court ruling in Colorado regarding Donald Trump make you more or less likely to vote for him? Yeah. The whole thing is, it's in Colorado. Trump was unlikely to win Colorado, so even if it stood, it wouldn't matter much. But it's all weird. I think part of what's going on, perhaps, is that people are negative on the economy because they don't like Joe Biden, right? So Joe thinks is the other way. Oh, my poll numbers are bad because people are negative about the economy. Can't you trade it? Well, I could, but I don't, based on what we just saw, I don't know if there's any point in doing that. Well, maybe there's a point in doing that because maybe it will make money and size up and it'll be really spectacular. And even if it, like, they blow it all, it could still be fun, right? Something I'm seeing in those results is that for some reason it will work really well because that asset is going up, and then when that asset comes back, it doesn't do very well. So I don't know why the results are a little bit different in the bonds on that, but I think that what I just got there kind of suggests that needs some work. It's very difficult to set targets. Well, so here's the first thing is trading on auction days like this can be a little bit frustrating because the order flow will give you kind of deceptive signals, right? Like these guys that they need to buy or sell for the auction or whatever the deal is, they're smart. They know how to play the game, and they know how to manipulate the flow to make you think that we're going to trend one way or another. So you gotta be careful of that, first of all, right? This is where being informed, I think, really, really helps. If the trade that we're making is long, then, you know, it comes back to 24, I'm probably taking it, right? Just because how much is it really going to come back and all of that. But I might take it at 24 and they try and bust me out first before it goes, you know, they're going to play those games with you. And you're going to see a lot of icebergs. And when you get a lot of icebergs, that can be really confusing. Right? I guess one thing, if you see icebergs on the offer and they're never able to get through them, and then, you know, they start turning every time you see the iceberg and it's really consistent. It's another thing when you see icebergs at the top and they just plow right through them and we continue trending higher, right? But when we're kind of in a range and you see icebergs on the offer and icebergs on the bids, and sometimes they get through them and sometimes they don't, and with the way that they're responding to the iceberg just seems random, that can be very, very confusing. And the way that that's one of the reasons why I say, like, iceberg is not really very predictive of something on its own, right? But what it does tell you is there are some relatively large players active in this market today, but so far there's no clear indication of an imbalance between those two guys. So if that's the case and I am going to take a trade, I probably want to take relatively close targets. It's a hard call because it's a Wednesday. It could turn into a trend. It could. So far, though, the first 30 minutes, I'm not too impressed. Not too impressed, unless, you know. Why do you want me to trade that strategy so bad, Lucas? I think what I want to do is I want to get a Series 3 license. I want to start a commodities trading pool. I want to have a strategy set up like that isn't amazing, but does appear to make money. And we're very confident that it does. And then allow people to join the commodities pool and trade that. And if I'm not taking a fee, there'd be a certain point at which I would have to start taking a fee and all that sort of stuff. But at the beginning, we wouldn't take a fee. As long as it's below 15 people and everything like that. You know, I think that would be kind of fun. I also had stops at break even because I knew I'm wrong. Yeah. I'm not a huge fan of having, break something at break even. I think that moving your stop up to break even really only protects you from the situation where, like, you catch a really good winner and then there's a complete reversal. And really, if your break even stop is getting hit at that point, you made a larger mistake. The flow had shifted. There was a change and you didn't detect it. Like last Friday, that's where I made that mistake, right? But when I programmed that into a strategy, it always hurts the profitability of the strategy. So kind of wondering with my strategy if I back out of it, don't have the whole voting logic in it, and I just have those two kind of rate of change variables, and then I want to keep it a little bit more simple, but have it trade a wide a bunch of different assets. What that would do, because my understanding is that trading a bunch of different assets is one of the things that can really bring your Sharpe ratio up, because, you know, one's going up and one's going down and whatnot. Is it possible to look at strategies that look at the bid-ask volume change and price change? Yes and no. So I do have some strategies that do those sorts of things. I actually, you know, I'm always kind of quite. So I'm about to tell you something that I've kind of been not tell people, but the one that I always found the most useful was, what is the imbalance between market buys and market sells over a fixed window, and like I would represent it as a percentage. So like when there were over the last 5 minutes were 60% longs or something like that. That was a very, very effective for short-term trading way of detecting changes. But it was one of those things that I found that when you get into those kinds of strategies, that there's some sort of bizarre hidden Markov system going on or something like that. Like it'll work really, really well and it'll win every time, and then it will work terrible and lose every time. And it just, you know, one day it just shifts, and then another day it just shifts. But the real problem with those strategies is that the data that we get isn't really good enough. So once you're starting to trade that short of a time frame and stuff like that, the difference in, say, like cumulative delta, there's a difference in the cumulative delta that you'll get when you're looking at it live versus when you're running it against historical bid-ask prices that can be as high as 10%. And I've found that for those strategies, that 10% difference does make a difference, because when I run it live, the results are not the same. So once you start getting into like order flow, backtesting order flow essentially is in its infancy, and the tools and data that we have don't do it very reliably. I've been doing some stuff where it's exporting that data for me, but I want to go all out with it, so I haven't really gone through with that yet. We had some that looked really good. We had some that, you know, they had positive Sharpe ratios and all of the, like, all of the things that I want to see in backtesting to suggest that they're worth trading. But then when we started to trade them on sim, they didn't translate. So there's something about it that when it was running live, it was not performing the same. Americans over 70 hold more than 30% of the country's wealth. Yeah, well, because it takes time to accumulate wealth. I don't think that should be surprising. Especially since we basically have everything set up to be that you can't access your wealth until you're 65. That doesn't make any sense. But the problem with those strats is when you try and automate them is that they only capture what is traded and not how it is traded. I don't think that doesn't make any sense to me. That comment. I really think the issue is the data is not good enough. So if I'm making my own backtesting system from the ground up so that I can account for those particular problems that the NinjaTrader backtester doesn't, then we have a better chance of being able to find something. Even then, we still have to worry about curve fitting and all that stuff, right? Like the strategy I was just showing you. Chances are it's curve fitted. Because I was doing optimization runs on it. I need to be clear. What I did was I got this strategy and then I run it for the day. Like I run it live against the live data in a sim account and see what trades it makes. And then at the end of the day, I go into the strategy analyzer and I tell it to run it on the historical data. And they're different. It takes completely different trades, which says to me that there's enough of a difference in how this thing behaves when it's running on tick replay that the results that I was getting from the backtests are useless. So my solution was I'm going to save the data that I get when it's live so that the data that I'm backtesting it on should be exactly what it was seeing if it was running live. And then seeing if I can sort something out. And if I'm going to take it that far, I might as well incorporate machine learning and so forth into it too. Was tick data the most accurate? Well, I think that if you have like a one tick data series, that does help certain things. I think that is more about would your order have actually gotten filled at the price that it thinks or not? That's a different thing. But like that's kind of part of why it's like the higher time frame that it is, the better the chances are of it holding those results holding up. So the results that I got from this backtest on this strategy that runs on daily bars, essentially, if you could go back to 2016 and trade it, I think that it would perform exactly as the backtest suggests. Okay, but there is probably curve fitting, which means that if we start trading it today, it won't perform as well as the backtest, the historical backtest is, because we're optimizing all of the values to be optimal to what it was doing in the past, and that's not what's optimal in the future. Basically, you've over optimized it. Now I'm trying to avoid that by, only having a few key variables, like in terms of like periods and things like that. But there's still enough leeway in there. It's probably curve fitted. Right. So like there's a couple of these like biases that can sneak in that don't that are really close to each other, but there are important differences, right? So what are they? So there's what I think is more commonly called overfitting. Okay. And then there is, I think we call it selection bias. Okay. So selection bias is like you take a shotgun and you shoot the side of a barn 100 times, and then you draw a target where the most hits are, right? Well, it's like it does this all over the place, and then you go, oh, my target was actually right here, right? Well, you were randomly shooting at a barn, so if you go back and you do that experiment again, the cluster is going to become somewhere completely different. So that target wasn't actually very useful, was it? Right? That's what selection bias is. So selection bias would be like, I have a large library of candlestick indicators, and I backtest all of them over the time period, and then I select the one that was the most profitable. Okay, that's this selection bias. Okay. Overfitting is like, we have a data series is like this. Now a lot of this is just random, but what I can do is I can say I have this formula and I'm slowly changing things. So like I have one factor that ends up making it look like this, and then I have another factor that's able to catch these other little bends and things like that, and you just keep adding things until you get a system that matches this curve almost exactly. And the problem is that it matches this curve exactly. This curve was random. So what you get in the future, you know, your formula doesn't match it, what the future ends up being at all. Right? So that is overfitting. And what could happen is you might have a strategy that actually does work, but because you overfit it, you screw it up, essentially, right? So these kinds of biases are really, really important because like in the early 2000s and in the 90s, there was a lot of people that were doing these studies, and they said, oh, actually, we think technical analysis does work. If you use this moving average or you use this thing, that seems to work, right? And the reason why they were saying that was because they were not aware of these overfitting problems, essentially. So once they came in and they started doing things to deal with overfitting. So how do you fix overfitting? What you do is you have a test period. You have a test data, you have, this is like your optimization data, and then you have like your test data, okay? So you optimize it on this one, and then you actually trade it on this one to see if those optimized values are still profitable, right? And if you're able to pass that test, then maybe you have a strategy that is actually stands a good chance of holding the test of time, right? Problem. How do you do this? I need, like, in order for me to optimize it well, I need a certain amount of data. And then in order to test it, I need another large amount of data. And let's say that, like, maybe I need 5 years worth of data. Maybe I need 5 years worth of data, okay? But I also know that the market has changed since COVID. So maybe this is a strategy that I only think will work since COVID. Well, then guess what? You don't have enough data to prove it, right? You don't have enough data to prove it because you need the whole 3 years that we've had since COVID to do your optimization and stuff. And so you don't have enough data. And this is basically like always the problem, especially as a retail trader, is it just somehow magically always ends up being that there's no way for you to get enough data to do it properly. And that's what's happening with us right now. It's like I have this thing, okay, I can test it over 7 years, but like I need 7 years test, like I need 7 years optimize and 7 years test, and I don't get that. And it probably has changed since COVID and these sorts of things, Yeah, also regarding large numbers, if the study is too big, you can't make it work for you on the short term. Right, well, that goes back to that the law of large numbers doesn't really work in trading very well anyways, because the distributions that we're talking about have such fat tails. So one of the reasons why I almost never add the like compounding to my back tests is because it just increases the tails, right? If I just always trade the same size, that gives me a much better idea of how the specific edge that I'm looking for, how does it actually perform, you know? You had a short? Well, I tell you what, it sure came back fast, didn't it? In the 10-year, the volume is still pretty iffy, but it looks like they sold it pretty hard in the 30-year. So there is something going on over there. And I'm not really necessarily seeing a clear relationship with, well, it's definitely not matching the Japanese yen, but it's not really matching the 6E either. So I don't think that this was a flow that we could have predicted at all. Yeah, forward testing can help if you have enough data. For the thing that I'm doing, I don't have enough data to properly forward test it. So my solution there was to try doing it on other instruments instead. And what I had found there was that because I'm using set stop sizes in this strategy, it doesn't translate over. So I need to set up an indicator, like probably just use ATR and have it be taking stops based on like a weekly ATR or something like that, right? The knob is traditionally considered to be ZB. I think that there is a spread that involves UB, but they call it something different. Let's see. So here's this lovely little, like, bookmark this page. Interest rate futures intercommodity spreads. And then they show you the spreads and ratios that are supported on the exchange. There are actually instruments that if you have the right data provider, that you can pull up a DOM and trade these directly without having to like leg into both sides. Okay. But there is, so T-bond is the 30-year, right? Oh, I guess there isn't one that's 10 versus, but there is one that's T-bond versus Ultra T, which is called the Bob. Yeah, I don't know, man. I think that if you think that you're seeing reads in this, you're probably just seeing noise. That was a freak move that has no real explanation or predictor to it. Did bring rates up there, though. Kind of to a spot that we had kind of been looking at yesterday, huh? Nah, actually wasn't, because we were above 3.9, weren't we? We were like 3.92. Ah, they're playing around 3.9. We'll see. There was a big iceberg that they busted through at 21, right? So maybe the downside continues. Forex Life says Euro perks back up as the dollar falls on declining treasury yields. Okay. Well, the dollar is falling, and yields are a little bit lower today. But the treasuries kind of started around here. They're not, the turning points don't seem to match up. It was really itches all of a sudden. Okay, well, they're staying down there, so there might be a little bit more pressure to come through. I mean, I think that there's enough of a clearer movement there in ZB to potentially try and take it on a continuation. I'm a little suspicious, though, just because it seems so random to me. Yeah, they're getting through those bids pretty easily, you know. Let's not say they're getting through them pretty easily, because there does appear to be a little bit of fight there at 20. But let's say that they didn't have too hard of a time coaxing people to sell it. Is Mrs. Romeo on tilt more than Laza? I think that the best way to deal with the tilt is to, you know, really have a really good reason to be taking a trade. See, if what you're doing is, I'm only watching the order flow, and I just kind of have a feeling that based on my reading of the order flow is going to move one way or the other, and I take a trade. That's very easy for that to get misaligned. So you throw in certain emotions in there and so forth, and now all of a sudden your read of the order flow is completely different. But if I have a theory that we're going to move up or down because of X reason, that there's a certain predictive flow out there, and then I can see that flow coming, that's like a different thing, right? There's a much easier to be objective about that. Especially in a market like this, because for all we know, this move down here might be really is just completely random. Wow. China's real estate losses could hit 4 trillion. What? That's insane. Okay, so they did get through a relatively large amount right there, 220. There was an iceberg at 3K, but there's actually been almost 6K that's traded there. So that might form a little bit of a liquidity hole. We are to a point where, you know, if this is just a random thing and we're going to find support, I think that it would be here. Yeah, I don't know. I don't think that this trade would be a very good trade, because this is based like almost purely on the technicals that we're seeing right here. But given that it's been a relatively tight day so far today, you know, I would be fading that and buying the 20. But maybe there's informed traders trading. Maybe they know some reason that they should be selling treasuries that we don't know yet, right? And if I'm not sure that I'm the informed trader, then I probably shouldn't be trading. Well, tick up at 2.5. Gran Turismo raising the bar by lowering barriers, huh? Have you guys seen that? I thought that was, you know what? It was like the most generic, predictable movie I think I've ever seen. But I really enjoyed Gran Turismo. And it kind of had me thinking that, like, you know, the financial world is very much like the way that the racing world was. The racing world, it was you had to have the money to get into it. And you're talking about something that, like, not a lot of people can do anyways, right? So how do you know, there's a lot of people that probably were capable and they just were never given the opportunity, right? And I think that the same thing is probably happening in trading. I think that there are some of you guys here on the stream that you know, I would put you up against institutional traders if you had the same resources as them. You know, you take you guys and you go through their education course that they would probably have, and you start trading with their resources and their information. I think that you guys would do really well. And I think that a lot of you would do better than the traders that they have, because a lot of them are either the people that went to the right school and did the right research at school, or they were rich and had the connections already, you know? Man, I'm that call that I had made there at 20 where I was like, I'm not informed, so I'm not going to trade it. But just based on what it's done so far, I'd expect it to revert back up there. Was a little bit too accurate, don't you think? A little bit too accurate. I still don't know how you're supposed to talk to people and trade well at the same time. Well, when I'm actively in a trade, I do quiet down, don't I? But I think that they actually complement each other really well. You know, for one thing, one of the problems that you get is you take a loser and then the brain just like doesn't function anymore. And if you're talking, that's one of the places that you can kind of get those chemicals going and to keep yourself in a good state and consistent and so forth, right? So another thing that the talking does is that the part of our problem here is you have like a slow systems process and a quick systems process, right? So the quick systems processes are like the machine learning in your frontal lobe, right? The slow systems process is like our logical thinking, our math, our things like that. And in trading, especially discretionary trading like we do, you kind of have to have both of those. You need to have the ability to do a real reasoned analysis of something, but then you also need the ability to be able to understand what's going on and react quickly. So you need both of those. So if I'm sitting here and I'm watching the order flow and I'm into the flow, that kind of means that my brain is in alignment with the order flow and that neural network is working really well. But then if I'm also talking about it at the same time, I'm also engaging that more logical processing system. And that's how I'm able to do things like this one at the bottom where it's like, well, okay, that looked like aggressive volume to the downside. I would want to say that will continue, but I only see it in ZB. That's exactly a spot where I would expect there to be some support because that's where the buyer's cost basis is in ZN. If you come over here, buyer's cost basis in ZN. And overall, the action has been tight and kind of sporadic. So I would expect it to come back up, but I didn't take a trade because I'm not informed. I don't know what caused that sell, right? But that's me going through it logically, and that helped me to, you know, be able to see where it went. I think you're probably right. I mean, there's a reason I didn't take the trade, right? I so like it's kind of the whole conundrum, right? Is that given only liquidity, I can predict what it's going to do really well, actually. Right? I know, based on overall liquidity, if there is not informed trading, it's probably going to bounce here. And it's probably going to go back to 23. Right? But if that was informed trading and they had more to trade, then they're going to go through it. Right? So I can't sit down and say, this is a setup I should watch for and trade all the time. Right? I didn't trade it because I know that because of the probability of informed trading, that's not a profitable trade. But there are some kind of properties about the market that I kind of know that all other things being equal, it probably will bounce back, right? But the point of that more was how am I combining the information that I have in order to make these decisions? You need to have both the logical processing side and the machine learning, kind of almost instinct sort of side of it as well to be able to react quickly. And talking to you guys, or if you're trading on your own, saying it out loud helps with that process. Saying it out loud helps with that. It helps engage those logical processing centers. If you shut down your stream, you might surprise yourself. The few times where I take trades off stream, I actually have had some pretty good wins from them. It's true. And there have been some things that we've seen at times that do kind of suggest that it's having an effect on the market. But I don't think that those are my real problems. I think that my biggest problem right now is that when I really have the edge, I'm not confident about it, and I don't really get the most out of it, right? Because there are some of these trades that I've taken this year where I made like $50-$60 on one contract, and why was I not trading that with like 3 to 5 contracts? Like, if I was informed and I knew what the flows were going to be, then why wasn't I taking it with multiple contracts? And why did I take it off early? Why didn't I just try and let it run? But then it seems like when I do try and let it run, it doesn't work out. So I don't know what the deal is with that one. I kind of I think it's kind of besides the point, like, so the first thing is you don't want to like start second guessing yourself, right? So it's like, well, I'm not having success, but maybe it's because of this reason or that reason or whatever it is. Like, we really have to come back to the realization that what we're trying to do is extremely, extremely difficult. And even if we're really good at it, we might not make money from it, okay? That is just our lot as retail traders. So that's why I always say I don't think that the benefit and the goal of it is necessarily the money that you're making. You make a certain amount of money every day and that sort of a thing. So the typical retail trader's perspective of this is, I'm going to go in, I'm going to learn to trade for 6 months, and then after that, I should be able to come in, trade every day, and make enough money to make a living. No, it doesn't work that way. The reality is it's so competitive, and we as retail traders are at such a disadvantage because of both the speed of the robots and the amount of resources that the large institutions have, that it is extremely, extremely difficult to make money. And to make money, you're probably going to need the right combination of circumstances, right? So really what this is about is getting as good at this as you can so that when the opportunity is there, you can knock it out of the park, right? Lately, this year, I wasn't as bad last year, but this year I feel that when I had those home runs, I choked for whatever reason. I didn't choke, but I took the profits early always. And then the ones where I thought that I was like, I'll let this run. The year before that, the ones where I was like, I'm gonna let these run, and they don't. I don't know what to do about that problem. But something else might come along, like a new market might come along, a new instrument, a new exchange, some opportunity. Maybe they make a change to the markets that disadvantages the robots. You never know what's going to happen, right? That could provide us opportunity to come in and extract a lot of money from the markets. And because we're coming in and doing this every day and getting really good at it, we're going to be in the best position to take advantage of that compared to other people. Right? I think that's kind of more of the approach that you've got to take. And so when it comes to like the stream and things like that, we have to kind of keep in mind what our goals and what our process is, right? So the first thing is the most important thing is process oriented. Am I following my process correctly? That's the most important thing, right? The second most important thing is am I building up a community? Because that's my best resource, is you guys on the stream and us working together. That is our biggest edge. It really is. And that's how we've been able to learn so much about the market. And I'm sure that it will continue to yield great things, and that there's many other great things that we're going to learn together about the markets that is not readily available out there. Right. So, going and taking a week off and trading off stream wouldn't really accomplish a whole lot, in my opinion. But taking a week off and being able to build my Kubernetes cluster, make another video, maybe get into some of this machine learning stuff, maybe get into some of this these CTA strategies more, right? That will help you, right? So that's what I'm going to do next week. Not to mention there's not going to be any trading next week anyways. But you get what I'm saying. You kind of have to keep the goals in mind. Playing the long game. That's another thing. What are we going to be doing? How is this going to be 5 to 10 years from now? That's what we need to be thinking about. Not necessarily what the market's going to do in the next month. I honestly think, though, there are some retail traders out there. The problem is that there's the technical analysis. So many people are out there running on stuff that is just not helpful. There's nonsense. But I think, you guys that are watching the order flow and are really trying to interpret the news and predict flows and things like that, I think there's some of you that you could go and give them all the resources that a large organization has and do really well, if not be some of the best. But I don't think that you're ever going to see the trading industry do that in the way that the racing industry has done that. Unfortunately. Well, so we did get a bounce. It's settled here. So my read on that bounce would be that we pushed down. There was a large meta order short. We don't know what caused it. It was mostly in the 30-year. That started to form a little bit of a liquidity hole, but then before that became too powerful, that large meta order subsided, and so we slid back to like this 22 area, and then they haven't been able to get back above 22. So yeah, we're in a liquidity hole right now. Since that, like, we settled, I thought the liquidity hole was going to be here, and instead we settled, and the liquidity hole ended up being 22. We're at the bottom of the liquidity hole, but probably it's too early for it to really do anything too interesting. When did that kind of happen? 7:30? It's only been 15 minutes. So it is curious that it correlates so well with the E-mini open. And meanwhile, the E-mini has been just nothing but buy on the open. When you lose, you have more viewers, but you also have to take shit from people when you're down. Yeah, I mean, I think that in general, they do get a little bit more viewers, but I don't know if that's actually a significant effect. I think that what happens is like Salim or maybe some, there's some other guys that were, you know, they're friends with other streamers or whatever, and then they go and they pass the link around, and so you get a couple more people from that. But I don't think that it's actually a significant effect. I think that I am too neurotic, right? Like, I am more neurotic than the average person, but I have a different threshold. It takes a lot to get me to that threshold, but then I'm neurotic. I need to be, you know, I feel like I need to be more positive. So this is something I've been thinking about a lot over the past week. And it kind of ties back into politics. So when you look at politics, this whole thing with Joe Biden, like, so he thinks that consumers are unnecessarily down about the economy, and that's hurting his numbers. So what is he doing? He's doing things to try and get people, you know, to get out of that slump and, hey, the economy is good, and change their minds. And it doesn't work very well, does it? Because everybody's just like, nah, I don't believe you. You just stole 3 years of my life, and now you want me to thank you? I'm not doing that, right? People are there's like this real pushback against them whenever you try and do that. It's because that's not an effective way to influence people. And for me to come in and be down all the time, you know, oh, this doesn't work, that doesn't work, that sort of thing. It's not very inspiring to people, right? Whereas what you would want to do is kind of be more the cheerleader, like, hey, this is good, we're doing good here, we're doing good with this, we've got this in our favor, let's go, right? That gets people more on your side, you know? And I don't do that enough. This is not like my natural tendency, and I have to work on that. Do you trade in Forex now? So you could trade in currencies. There are currency futures on the CME. You could totally try and trade those. I don't think that the game that you get with a Forex broker is very fair, because you're essentially trading against your broker. But even if you're going to go and trade currencies on the CME with the FX futures, it's not a game that we have a whole lot of room to gain an edge in, because you're trading against government insiders, and there's not a whole lot of other information that we get to explain why the currency is moving the way that it is. Biden on a mini skirt and bombos. He's like, I think it's so funny though, like, because the if there was a comparison that I was going to make to Joe Biden, it would be Jimmy Carter, right? It was like from the very beginning. Remember, I was saying I already, like, especially after Afghanistan, I was like, he is the worst president since Jimmy Carter. He is worse than Jimmy Carter, right? But like the parallels there are so strong, and he is making basically the exact same mistake that Jimmy Carter made, but like kind of the other way around. Like when people were down about the economy because of the energy crisis and things like that, he gets on TV and he starts scolding people. Compare that to like what Donald Trump does. Donald Trump is always cheerleading in an almost delusional way. It's always a delusional about how we're going to win and all of these sorts of things, right? But people respond better to that. They do. And I'm not good at that. You know, I'm not good at it because at its heart, I know that like most people are going to lose money from it, you know? But the truth is that we do have a lot to celebrate. We understand a lot about this market. We understand things about how markets work that put us above 99% of other traders. And it's things that I think are just so fundamental. I really don't think you want to trade without knowing this stuff. But most retail traders don't know it. We have learned those things. We've created a great channel. We've created a great community and stream with guys that are here literally every day that are really great traders and that I really enjoy talking to and doing something that we really enjoy. And it wouldn't matter to me if I was making money from it, whatever. That's something to celebrate. And someday the opportunity will come. We just got to be ready for it. The argument from a Forex trader I know to me to trade Forex was, dude, it's the most liquid in the market yet. It's almost all over the counter. Yeah, it is. And that's another thing that really bothers me about Forex is, well, like most trading is, I can come in and I can tell you, okay, if I know what the future orders are going to be, okay, there's going to be an imbalance between, there's going to be this guy who's going to come in with a big meta order, right? Okay. I can tell you, okay, if there's going to be a big meta order sell imbalance to the sell side, that price is going to go down. But that's pretty much all I can tell you, right? I can't tell you what price to get in, what timing to get in, any of that sort of stuff, right? If I have only the liquidity in front of me, I can tell you a lot of things about, interesting prices, where certain behavior is happening, where might be good risk reward locations to possibly get in, but I don't know which direction it's going to go because I don't really know what the future orders are going to be. It's only when I combine those two things together that I get a system that can be very accurate and really gives me like good hitting rates and accurate trades and things like that. And in Forex, you're not even allowed to see the book. Like, it doesn't even exist really. Most stocks, most people aren't looking at the book, although that data is becoming more available to people, right? To me, the whole idea of like trying to do technical trading without being able to see the liquidity is just dumb. And so, yes, I don't see really a whole lot of reason to trade the Forex. And to be honest with you, the banks don't either. Like that's the whole thing is why was Forex started, because there's these brokers and then they came in and got access to the market and then you're trading against your broker and that's how it worked. Well, why did that system evolve? Because the larger industry didn't want to mess with it. They're like, this is the kind of crapshoot. We don't like trading Forex and we only do it because we have to, right? The Forex desks are the hardest on Wall Street to make it at, okay? They just are. Forex became popular because you got really aggressive marketers out there and because every once in a while you're going to be in a trade and you're going to catch a winner because like there was some major country announcement that made the currency move like massive. Basically, the fat tails in Forex are insane, right? Like it tends to go through these weird patterns that pretty consistent, like from week to week and day to day. But then they'll make an announcement, and then the spread will move like or the instrument will move like 3 times what the range of the past month was, right? The tails are insane, and so you get these people that they made a big life-changing trade from Forex, even though ultimately they were just lucky, right? Yeah, we've also learned that latent liquidity is the most important, and to figure that out is way more complex than we think because it's dependent on underlying markets, correlations, option flows, etc. Yes. Well, the thing that latent liquidity is a really interesting one because I can see it, right? I can see that, like, okay, they've cleared that price a bunch of times, but every time that it clears, it takes 1,000 contracts. So there is some latent liquidity there, and they're just putting more, because the liquidity doesn't show up until it trades, essentially, right? And I can see these spots where they traded enough that it's creating a liquidity hole, and it kind of holds them back. Absolutely can see it. But I can't for the life of me come up with some sort of quantitative measure of latent liquidity, The best that you get is probably the volume profile tells you a little bit of something about what past latent liquidity was. Like the Argentina deal? No, probably not. That place is a mess, man. The guy that won over in Argentina, I think he has some good ideas, but at this point, I don't know if it's enough. They might just be screwed either way, Oh, yes, we got the news in 5 minutes. We're already screwed from past governments. Yeah. Like, moving over to the dollar is totally the right move. It's just, how do you even do that? Is it even practical to do it? I don't know. I don't know if it's even practical. They devalued their currency by like 50%, but like they don't have enough dollar reserves to do this. I don't know how they manage it. Are you planning to trade? Well, we have news in 5 minutes, and after the news, maybe we could get something. We'll see. Never say never. Because we are after the Federal Reserve meeting in January, I'm going to be very reluctant to take a live trade because you just don't get as much good opportunity late December. We had some pretty good moves on Monday, for instance, and it just didn't really play out, right? They have two currency. I don't know what that's about, but I'm just saying, like, if you could move over to the dollar, you have to have dollars, and they don't. So how are they going to do it? Okay, so we're getting closer to the news here. So we're going to be getting existing home sales change. We're expecting a negative spot 4. And remember that the new home sales was higher than anticipated yesterday and did have a little bit of an effect. So that's one we're going to be watching. And then CB, consumer confidence, they are expecting a reading of 104.5 versus a previous reading of 102. And we got about a minute left. What do you think about the Indian stock market? So I don't know a whole lot about it. I do think that India is a place that I want to be invested. And that there's probably going to be some real growth in their markets. And they do behave a little bit differently. Okay, so here we go. There might be more opportunity in those less mature markets. Okay, so they definitely pulled, like, all the liquidity is gone. Okay, so consumer confidence is significantly higher than expected. Oh, I was going to take that order at 895, but they didn't quite play out right, so it's okay. Existing home sales was spot 8 versus spot 4.2. So both of the pieces of news that we got were stronger than anticipated. Do you see how whenever I put an order up there, there's like robots chasing me? But they're not hitting it. They're probably going to force you to hit into 3.9 at the highs and then not go any further. What recession? You know. I didn't see how they react to this one, because the thing has been, for the past 2 weeks, almost all of the economic data that we've gotten has been good. And the market basically shrugs it off. There's like the initial reaction, and then the market shrugs it off. We still think the Federal Reserve is going to cut interest rates. It's almost like, you know, the cynical, well, they're going to cut interest rates to help Joe Biden's reelection, right? I think that's a cynical play. But it seems like that the market does believe it. At least it's the way that it moves is congruent with that. Okay, well, we had that move down. I'm not seeing a whole lot of more flow chasing after it. So it looks like we may get a little bit of a backwash here. I had plenty of opportunity to do 895. I was kind of looking for 89. What? You have a cherry tree in your garden and my dad decided to climb on it and trim it. Of course he fell down. That's no good. Dude, ladders, old people should not be allowed anywhere near ladders. That's like one of the most common death injuries. Okay, there was a little bit of, well, that's interesting. We came down. I actually seen cumulative delta climbed a little bit there, though. Your views on crypto? So I think that if you were, well, so I personally don't want anything to do with it anymore, to be honest with you. We actually have learned a lot about the cryptocurrency market, and I made a decent amount of money off of it. But I think that what's going on with Tether is an absolute scam, travesty, It's basically like the largest Ponzi scheme ever in history. And I'm pretty sure that you probably will make money on the next crypto run again. And that crypto run may have already started, but I don't want to be involved in it. I don't want to be involved in it. Oh, maybe many people say Bitcoin will be going to zero. Well, I don't think that it will necessarily go to zero, but if Tether were to be exposed as a fraud, it would get pretty darn close to that. You know, the decline that we had from the previous high in Bitcoin was something like 70%, right? So there is real risk associated with Bitcoin. But I guess the real question, like from our perspective, similar to Forex, because the movements in Bitcoin are based largely on trying to predict a small number of whales and what they're going to do, it's very difficult for us to gain a strong edge day trading cryptocurrencies. But if you were to buy and hold some of it and it's money that you can afford to lose, then go for it. I personally, I'm done with it. I don't have, like, I'm at a point in my life where, like, I don't have to make money, right? I mean, that's always been, I've always been comfortable, okay? But to me, it's like, the worst thing that could happen to me is somebody comes to my door and just decides to give me $1 million, because that just deprives me of the opportunity to make it on my own, you know? And, you know, so people always ask these questions, okay, would you punch your wife in the face for $1,000? Or, you know, there's always people on TikTok asking stupid questions like that, right? But my answer to any of those questions would always be no. I don't have to do anything that I don't want to or aren't interested in just because it makes money, because there's plenty of ways for me to make money. And I don't have a problem making money, right? So, you know, I do not like the cryptocurrency market. I do not think it's a positive thing for humanity. So yeah, I could make money from it, but why should I? I don't need the money. So why should I get involved in something that I am just, you know, fundamentally opposed to? So there was a little bit of a, you know, push back up, and but you're not really getting it over here. The NASDAQ seems to like it, though. That's interesting. Good news is good news for the S&P 500 today, at the very least. But what does that tell you? That tells you that the market doesn't think that that piece of data matters, and that the Federal Reserve is still going to cut rates in March. What level does it need to get to before the Treasury market says, hold on a second, maybe that's not going to happen? Right? I kind of want to be in a trade at 389, but I don't know if they're going to give me, and I don't know if it's actually worth it. The longer this goes on, the more I'm kind of like, maybe it's not worth it. Because they're trying really hard to get me to FOMO into 895. Oh, I missed this. This is an important piece of news for us. A Bank of England rate cut odds soar, cable tumbles after UK inflation slows far more than expected. Well, okay, so if you want to learn how to day trade, I have a video series about order flow that you can watch. Watch all those videos, especially the last few, because that kind of gives you some of the information that most people don't have that can really help you understand what's going on and why the market behaves the way that it does. I also, if you go to speculatorseth.com/strategy.html, there is a mailing list that you can sign up for, and it will send you this strategy document that I wrote up. It kind of goes into that stuff in a little bit more detail about how you turn this into a strategy. But the larger thing that I would say is you need to realize, if you're going to do this, that very, very few people are successful with day trading, or at least like the number of people that are able to make a living from it for 5 years or more is like less than 1%. So I would not go into this with the perspective of, this is going to be my career, this is going to be the way that I make money. Okay, you need to have a backup plan, or whatever the deal is. You need to have something else that's getting you money, because you're going to need to have money to risk money, right? I would only get into futures trading if there's something about it that you just truly fundamentally enjoy. If you believe that God put you on this earth to trade futures, then you're in the right spot. Otherwise, I would learn to code. You know, if you want money, learn to code. Go and become a site reliability engineer. That's like the best gig right now. That's what I do. That's my day job. Nah, I don't know. So I had put a few orders out there. So like right here at 892, if I put an order, do you see how the orders that were out there immediately react? Okay, not at 891. It actually kind of, the market paused. Okay, so, wow. When I put orders out like that, and the market seems to be responding to them, that makes me very nervous. Like, what I actually like to see is when I do that and there's no reaction and they don't hit me, even though it would make every bit of sense to do that at that time, right? Then that tells me that I am trading in the right direction, because the market makers don't want to hit me. They know that it's a bad idea. And that's when then I might start looking for a place where I can aggressively hit into the offers. But right now, the place where I could aggressively hit into the offers keeps being 3895, and I don't like that price. That's like the middle of the hole. I am from India. I find U.S. market more interesting. Can I trade from India? If yes, which broker should I use? So I don't know a whole lot about that. I don't see why you wouldn't be able to. I would probably start with the bigger ones, like Ninja Trader. You know, can Ninja Trader accept accounts from India? I don't see why they wouldn't be able to. So, you know what? They almost touched. I canceled it, but they did kind of almost touch it at 389. I wonder if I had held that, if it actually would have gotten filled or not. I kind of suspect no. But we're at above 39 now. So 3.9 really sucks because that's the bottom of the range, but if they gonna go, they gonna go. Okay. Okay, so that time I put the bid out and they hit it. So what does that tell me? Well, I might still have a good trade, but that tells me that the market makers are a little bit more comfortable at selling at that price. So that does tell me a little bit of something, and we'll see if more informed trading comes and continues to push it. The dollar is coming on strong here. That is very interesting. Iceberg at 18.5. That's not necessarily the best thing. It'd be great if they just plow through it, but well, I'm concerned that they're already going to start playing games here. I think that my fill there wasn't terrible, though. India has their whole own exchange even. Should be able to find one that will work best for you. Just got to search your options. You know, so I think one of the problems is that I don't, you know, they're in different languages and stuff. I really wish I knew more about the options for different countries. And I could make a video about that, because we do get a lot of foreign viewers and stuff. But is that cost basis indicator part of your yes, it is. Oh, that's really interesting you're asking about that. Well, so just if you're not familiar with what he's asking about earlier, I had pointed out that there was a move down. They got below the buyer's cost basis and then almost immediately bounced. And I was saying, oh, you know, given that it's range bound so far, this is exactly where I'd expected them to kind of shift. Now we're in between the two of them, which is an interesting spot. But, you know, I want to see how do the flows potentially change if we get below 18. And these are basically just spots that say, like average market maker positioning. If we assumed that every limit buy order was from the same market maker and he took a profit every chance that he had, what would his average position be? And that's what these are telling us. And what would his stop be? So if we were going to have like a full wipeout, if we were going to have a full trend, yeah, there's a long ways to go down on the downside that these guys could, you know, if these guys started stopping out. So see if they do it. There was an iceberg there on the offer at 19, and the sellers won out, and we've ticked down now to 18. Cost basis indicator is such an interesting one, because the number of times that I've seen it hard bounce off of that number is just amazing. But how do you prove the effectiveness of a line? I can't prove it. I think that there's really good theory behind it. We've tried trading it from like a technical setup, but it's kind of iffy. It's like all forms of technical analysis. So that doesn't mean that there's not anything to it. Kind of part of it is I want people to take it and look at it and help us learn more about it. But it is a very sophisticated indicator. You only get it here. And it's only $100. So, and you get all this other useful stuff like the spread charts and the dollar index. Dollar index is the one I can't trade without that dollar index. I don't know how I traded before I made that, man. Still a decent amount of volume. Like, so at 18, we've already had 3,000 contracts traded at 18. The bullishness in the dollar has subsided a little bit. This is like this situation I'm talking about where it's like, okay, so I know because that data was positive, we're going to see selling. How much selling are we going to see? We haven't even seen 10,000 yet, so I think we could get a little bit more. But this could be a situation, it's a Wednesday and everything, it could be way, way more than that. But I'm looking at it and I'm like, well, I can't seem to get it to go more than 5 ticks in my favor. Maybe I should just take the 5 ticks. So is this the one where I take the 5 ticks and then it just keeps going and I'm like, why didn't I push it? Or if it does push it, I'll be like, why didn't I take 2 contracts? Or if I did add a second contract on here, I'm not going to because it's not, I'm not that confident in it. But, you know, if I don't, and then it ends up going all the way back to 495 or something like that, right? MBO's at 16. In ZN, that's curious. I do find it curious that we've got all these 3Ks below us, but we don't really have the same kind of liquidity on the offers. Okay, there's another iceberg at 18 apparently. Kind of seems like we got 2 big guys kind of, you know, meeting together here. A collision is what I like to call it. Let's read about the existing home sales. Despite home builder sentiment ticking up and housing starts soaring, buoyed by a 100 basis point decline from multi-decade highs in mortgage rates, analysts expected a small decline in existing home sales in November. Instead, existing home sales beat expectations by raising 0.8% month over month in November, which pulled the year-over-year decline to just 7.28%. The latest weakness in existing home sales still reflects the buyer bidding process in most of October when mortgage rates were at a 2-decade high before the actual closings in November, said NAR chief economist Lawrence Yun. A marked turn can be expected as mortgage rates have plunged in recent weeks. The total existing home sale SAAR bounced marginally off record lows. So basically what they're saying is, okay, it was better than expected, and we're not even to the time period yet where we really expect it to be better because interest rates came down. So that's a little concerning. Mortgage rates are down, but leave a long way for home sales to drop still. But the gap between current rates and effective rates for Americans is still immense. I'm not going to read all of the little details here for you. Let's see here. Between record low inventories and housing starts accelerating in the latest data, coupled with Powell's massive pivot, has the Fed reignited its third housing bubble of the 21st century? Is what they think. Well, I do think it is a concern. I am still very skeptical about this, that they're going to cut rates in March. Because all of the data in December has been good. You need to cut rates in March because you expect weakness in the economy. And if you're not getting that weakness in the economy, then how do you justify that? In another chat, and again today, TradeOvate having disconnect issues and not letting people close trades. I just don't trust that service anymore at this point. Oof. You know, well, I mean, I think this has always kind of been the thing. I've had some nasty arguments with developers about this. Or like, there are disadvantages to a web platform. There really are, right? Because if something's wrong with their platform, you're completely dead in the water, right? Versus, in order for me to have a problem, I have to have a problem with Rhythmic. Never had a problem with Jigsaw. Maybe I haven't, I just don't remember, but nothing significant. I'm sure they're going through growing pains and eventually they'll work it out, but I'm with you. I don't trust them. More broadly, I just don't think you'll ever catch me using a web platform. Like I run these things for a living and I'm just, you know, like my whole job is my whole job is keep the web service running. And I know what's involved in that, and I'm not willing to put my money at risk over that, right? Because I know even we've been doing a pretty good job of my work, you know, site reliability engineering and stuff, but there's just so many things that go wrong. There's always something going on. So why SREs exist. Okay, they did briefly clear 17.5, but it's still being pretty slow and careful. I'm gonna be interested to see if I hear anything about this on the day trading / futures trading subreddits, because last time this happened, there was a lot of hubbub about it. There was a lot of people that were very upset by it. I was kind of shocked at how many people were using it and how upset they were. Because I kind of feel like you're using a web platform like that, you kind of almost have to expect that maybe once a year you might have a problem, you know? Eric Wallerstein says the consumer confidence number was the highest since July and the second highest since January 2022. So, about those financial conditions, ... I find it interesting that of all of the data points that we've gotten over the last 3 weeks, let's say, that this is the one that's starting to get the most people out of the woodwork saying, can we really cut interest rates with this data? Because consumer confidence is kind of like not usually a major data point, you know? I'd kind of put it as like a you know, silver or bronze tier event. And I'm not going to say that we've seen super strong flows from it either, but we have moved a little bit. But it's the commentary. I'm seeing the commentary on it. A lot more people are starting to question the current market pricing now than they were, say, last week. Last week it was like, oh, of course this is bad. There's no way. But like nobody said anything about it and the trade fizzled out. 3K to take 17.5. So there's still some decent bid liquidity. And so far, though, they've been able to eat away at it and are still on the lows. It's interesting to see Nicholas Taleb arguing about Palestine versus Israel. I think that he kind of is, it seems to me that he is maybe partial to Palestine, but let's read his comment here. There is a talking point that Palestine did not exist before the 1920s. It's wrong, and the implication that there were no people because of the absence of a nation state is farcical. Okay, that's true that there was no nation state of Palestine, but there were people there. I think the only reason that it matters is because people try to make this historical claim as the basis for why they should just be given the whole entirety of the land. So I think the point of pointing out that they were always occupied by somebody else is to just show that it's been a disputed piece of land for forever and that we need to just work out what we can now with the current situation. Oh, I don't think he's allowing comments. Only mentioned accounts can reply. Okay. For somebody that likes to stir up so much shit on Twitter, he sure is sensitive about replies, isn't he? What's with that? You're getting the best offer, strongest offer we've seen here is 17.5 so far. It still seems like they have to coax the people into selling at each step, though. Some chefs like to stir all the pots in the kitchen, but don't you dare touch theirs. Yeah, I don't get it. Not well, but I mean, isn't... Maybe I'm wrong. You know, because he's a famous person, maybe it's different. For me, if I was posting shit like that on Twitter, the reason I'd be doing it is because you get a lot of engagement and replies from it. And it almost becomes an addictive thing in and of itself, right? So why would I get mad when people start playing that game with me? But maybe it's different. Maybe he never intended to actually be like that. He just thought, oh, I'm going to say what I want and put it out on Twitter, and I'm famous and I get all the replies. And then he never liked the responses to it. That must be what it is, because that's the only thing that makes sense to me. The way Biden's situation is going, I think Putin should contest this election. You know what? There's just so many interesting what if questions. You know, I remember being younger and feeling like I had really confident predictions of what was going to happen in situations like this. And now I'm just kind of feel like I'm along for the ride, man. Okay, 2 ticks up really quick in the succession. Not too happy with that. Well, actually, there was a little bit of buying volume on it, so... Let's see here. Larry Summers. Even when elections didn't go my way, I always thought the system was robust and that pendulums swing. I do not feel that way about the prospect of a Trump presidency. I think there is substantial risk that it would be immensely destructive because it moves the conversation in realms that we don't usually think about. Its destructiveness won't take the form of interest rates being 100 basis points lower or higher than they should have been, or the budget deficit being a 1.5 percentage point of GDP higher or lower than it should have been. But it will take the form of a destruction of the fabric of the rule of law, which is the air that successful capitalism breathes. I totally disagree with you, Larry. I think that you guys have already done that. Like straight up, the quote-unquote rule of law in this country was destroyed 4 or 6 years ago. And now we're just living with the aftermath of it. Yeah, Larry's back with his logic of, to maintain the fabric of the rule of law, we must blatantly disregard the fabric of the rule of law. One of the things that concerns me is that I saw this sort of stuff kind of starting with Mitt Romney. It was like when it was Mitt Romney, it was like he hates women, he's going to do this. It was, it was always, what's the worst things that we can say about him, right? And with Trump, it's just kind of escalated. And there's this idea that like it's just unique to Trump, and then when Trump goes away, we won't have this discussion anymore, sort of thing. No. If it was Ron DeSantis was the nominee right now, they would be saying the exact same things about Ron DeSantis. They'd be saying, we just can't, it would be destructive to the rule of law. We can't allow Ron DeSantis to be president. They're going to do it no matter who's the Republican is. Now, I guess they wouldn't say that if it was Nikki Haley. If it was a pro-war, if it was an aggressively pro-war Republican, then they wouldn't say that, huh? Just saying. Just saying. I need to stay focused over here on the treasuries, though. We've kind of ticked back and forth at 18, but look, there's 1,000 hit at 18.5. That's not particularly favorable to us. And it does appear to me that the meta order that we were writing has kind of subsided. And maybe just kind of balancing now at 18.5. Although there is a possibility that they cross back over to the hole that was at 20. The consolation, though, is that it didn't take very much for them to tick up those 2 ticks. It wouldn't take very much for them to tick down 2 ticks. So could probably go either way. We'll see what the orders do. But I do need to be careful about this because this is reminding me a lot of Monday where, like, the move happened and then, like, you know, it just unwound. They didn't get anywhere with it. Surely I can get more than 10 ticks off of it. Oh, yeah? Maybe not. Maybe not. I forget. What's the difference between death and taxes? I've heard this joke before, but I don't remember. I don't remember the punchline. Should note that we are seeing a little bit of flattening off of this move, but not too much. Forbes, 8 ways to pair wine with Christmas cookies like a what the? Is that a thing? Okay, that just seems like a weird article name. Whatever. Nikki Haley has still not made any remarks on the Colorado Supreme Court decision, according to Stex and Hammer. I haven't heard as much from that guy lately. Yeah, he stopped making stuff on YouTube. I don't just hear from as much from him. I always thought he had an interesting take. What was this? Consumers' perceived likelihood of a U.S. recession over the next 12 months abated in December to the lowest level seen this year. Okay, tick back down to 17.5. Not a strong offer, but a good hit back on the offer in absorption, so that helps. I'm not seeing the 5 and the 30 down tick though, so. Okay, there's the 5-year went, and that helped the spread there a little bit. Now the bid's pulling. You see how it kind of moves in steps? It's like now 1,000 contracts. 14, 18. And why did it do that? Why did it switch there? Because the 5-year ticked back up. There's no way for me to understand why the level 2 is changing there in the way that it is without seeing the other instrument. Okay, well now after the uptick, well, part of this is that the dollar had a pretty strong move up and then it came all the way back. The Treasury is still sold through that, so that's pretty good for us. But Andrew, do I look like Andrew Tate? That's funny, dude. I don't like him. I don't like him. I mean, he said a couple of things. He made a few points when he became famous that I thought were really good and needed to be said. But I never liked him as a role model. And it does seem to me, of course, I'm not privy to like all of the information that's involved there and everything, but it does seem to me that he's basically was involved in human trafficking, right? He was luring women over there and then coercing them into an abusive relationship where they were cam girls. It's one of these things that I just... Like, the bigger thing is this. I am conservative, but I don't like conservatives. At least I don't like the most prominent conservatives out there. It's just, you know... Okay, you look at the left, and they want to give everybody gender transitions and completely reform society into who the heck knows what. I think that the rhetoric from the left is very dangerous. But you look at the right and they believe just absolutely batshit crazy things. You know, like, oh, well, we should just abolish the Federal Reserve, for instance. That would be like a really bad idea. They're often pushing ideas or lines of reasoning and stuff that I'm just not on board with. I think that like conservative like approach and ideology and overall is correct. It's just the group of people that tend to latch onto it have some very incorrect ideas about society. And it seems that like because of that, you also are very prone to getting just outright grifters in the conservative space, right? And I kind of feel like that's what Andrew Tate is. He's just a hustler. He wants to make money. He doesn't actually share your values whatsoever. Now that right there was interesting. So we ticked back up at 18, and then we were immediately shoved back down. And when we did, there was a very strong offer. There's 2,300 were immediately on there, and I saw selling across the board. The 5-year did it as well. That was a strong downtick right there in the 10-year. So now that somebody kind of came in and like put their foot on the throat of the market here again, we'll see if we see people start puking at 17 now. So far, not seeing it. Sometimes they have to do it a few times before you start to see people hit the 17. Like first time it goes 17 becomes best bid, nobody touches it. Second time maybe one or two people hit it, and third time then you start to see more people actually do it. Yeah, they're just scamming people by selling their course. Yeah, dude, the amount of money that he was making from Discord and stuff is just crazy. And this is another thing that really bothers me about the modern world today, is that people will say like, oh, you know, if you make good content, then the algorithms will push your content and it'll get out there and whatnot. But Andrew Tate's popularity was not organic whatsoever. It was his followers basically running a scam. He told people, if people use your affiliate link, then I'll give you money. And here's the subversive method that you should use. Just make as many accounts as you can and repost my content everywhere. That's what they did, and they pushed it. The reality is that you just saturate the market. If I go and I have a few songs, and I say, oh, maybe they're just average songs. I guarantee you that if I paid enough money to go and saturate the market, that everybody would just absolutely love it. If it's on the radio every 15 minutes and you're listening to it, you will eventually love my music. Why is Taylor Swift so popular? Is it because, she ticks... Part of it is, she ticks all the right boxes that like a large demographic of people can enjoy her. But I'm telling you, a very large portion of it is saturating the market, the exposure. You see her so much, it's almost hard to hate her, And that's what happened with Andrew Tate. He just saturated the market. It shows how easy it is to actually manipulate sentiment. And then he makes millions of dollars out of as somebody that nobody really likes. Stupid. Okay, there's your 16. What was Octavius saying about 16? There was some MBOs there. So the situation still look the same. Well, I guess we'll see here if they take 16 off or how many contracts it takes to get there. Let's reset our DOM. Let's recenter our DOM, rather. He says, yep, that they're still there. So I think that means that it probably will take a decent number of contracts in order to clear this. I do like, I like the way that pulled out, that it was just like all of a sudden there was a strong downtick, and then after that it kind of fell through. So you can kind of see how you can use those tea leaves, maybe. I didn't necessarily know that it was going to go lower, so a little bit of luck involved in this. But, well, if we make 15 off of it, I guess it will be okay. but I'm kind of feeling like I should be able to make more than that, you know? British households could see their energy bills fall nearly 14% by spring as a mild winter keeps demand muted. Yes, because it is El Niño. El Niño means little boy in Spanish. Well, So, from the perspective of the 10-year, I would expect there to be still some more volume kind of selling as they like puking from this. Not really seeing that. I am in the 5-year. The 5-year really drove the push lower. S&P 500 keeps rallying, man. Again, how far can this go before people start to go, oh, wait a second, maybe we got too bullish and screwed it up, right? Oh, no, wait, that's right. There is no number, right? Because they're only doing it to make sure Joe Biden gets reelected. That's right. Does look like I could have gotten 15 if I'd had the order out there. There was some stops in the micros. Come on, let's see that 16 trade. I'm sure that big old guy there, he wants to be filled. Let's entertain him. Okay. Pretty quick collision. They put another 1,000 on there, and then that quickly goes off as well. So that's about the best way that you could have seen that handled. Now, there's still pretty strong bids below us. I don't know. Or maybe, ooh, okay. So only 618 at 15.5. This is starting to go for us. Now, seeing the spot where there was like 3K liquidity before and the market makers just completely pull from it, and seeing what was like looking like a really big volume node, them clearing that so quickly really does suggest that there is a lot more to sell. That Muslim. Why did he say that? I don't know. I tell you what, I don't know where that goes in the world. Some people seem on the conservative side seem to have this idea that like, the West and the Muslim world are fundamentally incompatible, and we just need to keep the Muslim world out of our country and everything will be fine. And, there are things about the Muslim world that I don't like for sure and everything, but I don't think that the whole, like, we're just going to keep them out is a very practical solution. And furthermore, I see people talking in Saudi Arabia and like they're dealing with it. Like they understand there are some problems in Muslim society, but there's also some things that are really positive in it. And they don't seem to think that Muslim society and Western culture are fundamentally incompatible. So how do you actually deal with that in the long run? I don't have an answer, and I'm really interested to see how it ends playing out. Okay, so on that last move down, there was some real puking in the 5-year, but the 5-year is getting a little bit of a rebound. There was some strong backwash on that one. I think probably we need to come over to the volume profile and take a look at things. So where are we at? Well, we're not even to lows of the day yet, let alone like lows of the week. And It's possible. Like, I think I'm stretching if I really want them to get to the lows of the week. But could they get to lows of the day? I think they probably could. Might take a long time though. I might not be able to hold it that long. But we'll see. I'll try and hang on. I got 10 minutes left before this, and I can kind of keep it open after the stream. Although I would say, yeah, in fact, really, I'm a little bit suspicious. This stuff right here. So that showed up really strongly when we pulled back up, but I kind of, sometimes that's like them messing with you, right? Not messing with you, but like these guys, they need to get filled short, and that's a great way to try and create this backwash into them so that they can finish filling their orders, right? But it was a pretty decent pullback, and it's enough that I do have to consider taking it off. And given the time frame and everything, I think that I probably should. Aha! No, I don't think I should have done that. I don't know if I can take that back. So I put my offer out there, and they immediately hit it. So if there was something going on that we were likely to backwash a lot more and or reverse this, the market makers would probably be a little bit more reluctant to hit my order like that. The fact that they took it instantly says that I was probably too early. They might still kind of balance around this area for a while. I really think if I was to try and justify staying in this trade, I would have to plan on being in here for another hour. I don't think I want to do that. Oh, but that's one of the things that I think is killing me. Like in terms of these ones where I really should hit it and it should go. Part of it is the time frame. But it's staying where it is right now, so I don't think that it was terrible. But it wasn't optimal as an exit, right? Or rather, if they do turn around and I actually ended up getting a really good spot, there was a lot of luck involved in it because the way that the market making is behaving was not the most optimal there. Kind of suggested that there was still room for me to make more. Greg from the Wall Street Journal, meet the new economy, same as the old economy. Key indicators today look eerily like what was predicted in January of 2020. Did the pandemic that was supposed to change everything actually change nothing? My column. I think that you'd be surprised at the number of things that haven't changed for sure. I wish I had a Wall Street Journal subscription so I could read that. Oh well. So the thing that you got to be careful about, this is what happened in this situation. We're moving down. Hey, let's not do it with that timer thing engaged. Okay, we're moving down, and then we made a liquidity hole, right? And then we pushed down again, kind of like that, and we made a liquidity hole. It's a cup and handle, actually. And then again, liquidity hole, or push down. Now on this push down, there were some real stops, right? This one kind of like, it actually kind of went like this, right? This, you pushing through that liquidity so quickly like that, is likely to create a liquidity hole. And so no surprise that we, sweep back up through it very easily, right? So from my perspective now, if the liquidity hole is at 16 right here, and I'm just guessing 16 because, that's like the big round number there, right? It's likely to rotate around this for 45 minutes when I've got to get going, right? And quite frankly, might have been the end of it. Like that might have been the end of it. Like, okay, this move from 830 was the meta order, and then it subsided, but then it wasn't coming back up. Nothing was happening, and the market makers that ended up long down in there are like, oh, I guess I have to get rid of this. And then that was caused to stop. That could be a sort of thing that could be going on. But either way, what I'm seeing in the liquidity, the pullback here, kind of just the way it's behaving here kind of does suggest that leg was over. So my exit actually wasn't as bad as I thought. I could have gotten 20 though. That probably would have been optimal. So, but it cancels out at least one loss that I had on Friday, so that's cool. Half of it, we're halfway there. We're doing okay. We'll dig out. It's always the same. It's there's a hole. Like this has been my trading. Okay, it's like we'd had this, and then hole. We make it back hole. We make it back hole. Right. But then when you look at it from the perspective of like, when you include commissions and data fees and everything, then it's kind of like, actually, it's like this, right? We've lost money when you account for data fees. But I'm okay with that. I'm actually quite proud of my performance this year. Past a year and a half or whatever. It's been not bad. I still have a long ways to go. It's so much better than where we were before, and I'm really, really happy with it. You guys should be happy with it too, because you're a big part of it. So thank you very, very, very much. Today wasn't bad, was it? Actually, I'm really happy with the way that I played today, because the earlier action, there was kind of something going along. Probably could have sold it much earlier, of course, but I didn't like the way that it was playing. I waited until that news, and I got a pretty good price with that news. I could have gotten 3.9, unfortunately. Or no, was it 3.9.5? I think it was. Yeah, 3.9.5 was, it was sitting there for a while. I put an order at 3.9 and it kind of came towards me, but then it didn't fill me, right? And so I didn't get in until 3.9. So I could have gotten it a little bit earlier, but it was good for me to recognize that there wasn't a reason to trade, and I didn't do anything until I had something that I felt like predicted the orders, which was having two pieces of economic data coming out that were both significantly better than expected, and the market starting to come to this realization that maybe it really is crazy to be expecting rate cuts in March. So we're going to see how this goes. Tomorrow's another day. Actually, I don't have to work tomorrow, but I'll still be here tomorrow and Friday. I suppose that after the regular stream, I could stick around and do some things if there was some specific stuff that we wanted to do. But usually when I do that, it's not really worth it. Plus, I have to study my Series 3. So I'm probably going to spend the focus tomorrow will be on the Series 3. And then maybe on Friday, I will take another test. Friday, maybe I could take 2 tests. There's like 8 of them or something else. It's so hard. So much time doing the tests. I tell you what. Okay, guys. I'm yabbering now. I will see you tomorrow. Stay excellent, team.